Hello, everyone. Welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. And just want to do a little video today. I was trying to do this earlier in the week, so if this is a Monday, I'm sorry. I have a lot to do, and this unfortunately I can't do this full time. Hopefully one day I'll be able to, but for now, I can't do that. And I said, hopefully. I don't even know if I'll be able to. Uh, but anyway, just want to do a disclaimer before anything. Nothing said on this should be construed as financial investment advice. Just my opinions. So anyway, the jobs data was huge. 256,000. You can see sharing my screen, 160,000. We look at the consumer sentiment, and I was looking at gold, and it really sold off in the beginning. But then if you look at Michigan consumer sentiment, that was less than expected. It came in 73.2. Consensus was supposed to be 73.8 and forecasts of 75. And looking at this, I'm going to go, that's the only real. Right here, what sort of happened was 10-year treasury yield, that started shooting up. So interest rates, they're going to get to the point where if they want interest rates to stop going to 5%, moving closer to TNX, closer to 4.8. Right here, I'm sharing my screen. Highest level since late 2023. Investors also fresh data that show consumers are more pessimistic about future pricing pressures. So inflation expectations rose from 2.8% to 3.3%. So this is the highest since May of 2024. Long run inflation expectations ticked up from 3% to 3.3. So that goes to show that the reason why gold sort of turned and started finishing really strong is that the inflation numbers really started to. And the funny thing is, like, why it happens, this is why some people, you have to really go find it. And I found it here, but let me see if Kitco, they actually showed me something actually very interesting about gold dollar shows something very resilient. I wonder if they had one. Yeah, here it is. They had an initial sell-off of gold. And that's because the strong economic data. But as I show you, the Michigan consumer sentiment, inflation numbers, among others, this is what I said. Two things are going to drive gold. Either inflation, which you saw on Friday, or there's going to be bad economic data. Now, despite the strong jobs numbers, I wanted to get into a couple of things so far. You look at it here. Let's see. Don't need that. Don't need that. I need to start doing the fear and greed index. And right now, ooh, we can do that since I'm right here. I'm not a big fan of CNN, but they do. Well, here it is. Macy's closing 66 locations. So as you can see, the inflation, the cure for this is asset price deflation. Prices go down. That means asset prices have to go down, though. Uh, but it's not inflation. And here it is, Macy's closing several dozen stores, 150 underperforming stores by 2026. I bought my suit there. I bought my tuxedo actually there, and it's really, really, I like the store. I mean, and they have really good tuxedos and suits. I mean, I don't know. Maybe I'm a plebe. I don't know. Maybe I'm just a dumb plebe, so maybe that's why I shop there. I consider it higher end, and so this is really a good sign that the economy is doing poorly, in my opinion. Uh, Look at this. They argue that Macy's is sitting on real estate more valuable than the company itself, and it's struggling to make its struggles make the stock unattractive. That is worth less than the sum of its parts. So what are they proposing? Selling it, renting it out? So I don't know how is that going to add value? Are they going to do unrealized gains, imaginary gains? See, they argue. Who's they? Could be sitting on a gold mine. So deep trouble. So they wanted to. So, but why do that? Why not just sell the company and then let the company go? This is why people are dumb. They're like, sell off the company and shut down the company, sell off the real estate. No, why don't they have a developer buy out the company? That's dumb. So anyway, more trouble that showed that Macy's, that I think backs me up. Here's, credit card defaults uh on the rise. Look at this, highest level in 14 years. Defaults jumped to a record 46 billion from January through September 2024. And where was this? This was not, look at this, January 9th. See, you can tell I wanted to do the video, but I had a lot of busy things to do. Go church and everything, errands. No, I did not watch the NFL. I'm not a normie. I watched a little bit of the NFL. I take that back. I did watch a little bit of the Eagles Packers game, and then I fell asleep to the Ravens Steelers a little bit, but did not watch much of the NFL. Uh, Credit card defaults, look at that. 46 billion. This is high level. Many consumers have found themselves unable to cover a monthly payment. So this is going to keep going. And this, like, they go into default when they miss payments for over 180 days. So this is 6 months. So I would say there's more to come. So I think there's more to come, if you ask me. So I'm just looking at this, and maybe this is the first one. Maybe it's not commercial real estate. Maybe the credit card debt is going to come first, and maybe they go to sell all these commercial real estates, and maybe this is the trigger. And the Capital One is known for credit cards. Yeah, so collection agency, I guess collection agencies won't be laying people off. Now, are they going to hire, Americans, or are they going to hire visas people? That's the big question. So, so anyway, that's all. And that's not all. A couple of things about crypto I want to remind. Right now, you look at Bitcoin. This is what people, I don't know if this is the top or not, but two things buyer beware. Right now, I'm just gonna go, let's go to Bitcoin futures. This is Yahoo Finance. So let's see, BTC, that should be Bitcoin. Let me go here. So right now, I believe this is the price of Bitcoin, 94,000, down 690 for the day for whatever. But I was looking at this and I'm surprised. This was in my email list to database, but Coinbase restricted my account without explanation. Support refuses to provide clarity. One customer with 2 million in inaccessible assets. So, as the guest Rahul says, hanky panky. I think we talked about it, but it was in my. But if you look at it, you got stuff like this going on, and then crypto could save the US from a debt crisis. So, anyway, crypto could save the US debt, former House Speaker Paul Ryan argues. So, stable coins could delay and purchase US debt. So, anyway, if you ask me, does that sound more like euphoria or pessimism? I would say it's pretty obvious what that sounds like. So Anyway, that's all I have to say is that you can tell the economy is doing poorly right now. Gold has gone up and it will continue because it's either going to be inflation or bad economic data that's going to force the Fed to drastically cut rates and start easing, and that will create a run like 2019 where it went up from 1100 to 2K, but in this case like 2600 to 35 or something. Or it would just be inflation. So anyway, that's all I have. Hit that like button, subscribe, and just disclaimer, nothing said should be construed as financial advice. We'll do more videos this week. Hit that like button, and I will see you, I guess, next time I do a video, which will be soon.